Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube as well. Crucial moments of the day, Carol, and really crucial moments of the week. A market that really can't gain any traction, at least not to the upside.
No, and take a look. In these last few minutes, we're taking another leg down here. So we're at our lows of the session. That means down more than 3% on the NASDAQ, down about 2.5% on the S&P 500. So you're really feeling this negative tone, Tim, going into the weekend.
A negative tone, but we got some optimism just now from Emily Rowland, co-chief investment strategist at John Hancock Investment Management. She not only sees an attractive entry point right now for fixed income, a better entry point than we've seen over the last decade, she says, but there's a compelling entry point for some of the higher quality companies, the quality factor companies, and specifically tech names, classic S&P 500 tech companies that she says are attractive right now.
Interesting, I guess. If you believe the forward PE ratios, those Romaine and I have been debating, it all depends on if we're in a structurally new environment. And that, of course, is the question.
I don't believe anything right now.
Okay. Do you believe in Santa Claus?
I do. I absolutely
all right.
do.
In all seriousness, though, I mean, and then we don't obviously have time to do this big discussion, but to Taylor's point, I think we also need to kind of start talking about some of those other metrics, because I think when you start looking at price to sales and some of the other metrics, the price to cash flow, valuation metrics look way different than just on a PE level.
Can we do PE if they have no E?
That's the ongoing battle for you. But also it's about the alternative. The alternative, as you mentioned, whether it's in a fixed income that has a better entry point, is just hearing from Emily Rowland.
Yeah, from Emily Rowland there, and we're going to hear right now the closing bells here in New York on this Friday afternoon. Another wild week here in the markets. It looked like just, I don't know, a couple days ago we were talking about a big rally on our hands here yesterday, and not a couple of days ago, yesterday. All sort of a blur here. Nevertheless, the Dow Jones Industrial Average going to finish the day lower by about 1.3%. The S&P 500 down by about 2.4%, and the NASDAQ Composite down by more than 3% here on the day. The Russell 2000 going to close down by about 2.6%, and you're also seeing big declines here on the day in both the Philadelphia Semiconductor Index as well as the KBW Bank Index, too.
Right. We did see, though, continued outperformance, as I've been talking over the last couple of days, for the airlines, which are up more than 4% this week. But did you guys see for the week overall? We know the NASDAQ's down more than 3%, the S&P down 1.5%, the Dow actually a gain of about 1.2%.
Yeah, sort of the, go ahead, Romaine.
No, go ahead. I never interrupt.
That is, of course, Carol, sort of the only index that is bucking the trend of a weekly loss, of course, that you mentioned, the Dow. Take a look at where we are on a sector level. And Carol, to your point, it is red all the way across the screen, except for the lone green sector, and that is the financials. A lot of the financials, of course, that we heard from today are getting a boost higher, as much as 1, 2, even 4% a little bit earlier. I know that we'll dig into that. Everywhere else, though, a lot of red on the screen to end out this week. And some of this is sort of that classic risk-off trade. You have materials and energy and auto and semis in there. But you also have technology. And, Tim, earlier to your point about what is the safe haven in this environment, technology not even able to catch a bid either. All of these, Carol, they're off about 3 to even 6.5%.
Yeah, really significant moves, certainly to the downside there. So in terms of gainers, really a big standout in today's trade, no doubt about it, were the big banks. In fact, the top 3 out of 4 names in the S&P 500 were the big banks. J.P. Morgan among them, up more than 5% at its highs today, finishing the day with about a 1.7% gain. We know posted record quarterly net interest income, raised its guidance for the year. So a lot going on there for that one. U.S. Bancorp, this one was up about 3.4% by the close, number 1 in the S&P 500. Stock was higher out of the gate, moved up after U.S. Bancorp won approvals from the Fed and the Office of the Comptroller of the Currency to acquire MUFG Union Bank. They also, that news came just hours after the bank reported third quarter results, which showed revenue, net interest margins beating analyst estimates. So that was definitely an outperformer. And then the airlines, I know I've been talking about it a lot. Delta adding on another 2.3% in today's trade, top in the S&P 500, getting an upgrade by Cowen today after yesterday's third quarter revenue report and saying that fourth quarter profit is outpacing expectations thanks to biz travelers. But airlines really outperformance for the week overall. And don't forget, we're going to get some more news in terms of earnings from airlines next week.
Okay, from the skies to the ground, though, because we got to talk Tesla. The company closed down 7.6% today, extending its slump from a record reached last November to 50%. Tesla shares now trading at $205. We did get a note from Morgan Stanley's Adam Jonas earlier today, who said that 2023 estimates for the automotive sector must fall significantly. But of course, higher rates not helping a company like Tesla much either. Also, First Republic, the biggest decliner on a percentage basis in the S&P 500 today, the worst performer there. It said net interest margin for 2022 now expected to be at the lower end of its guidance range. Investors sending shares down by 16.4% today. Beyond Meat finishing down 10%. It lowered its full year sales outlook. It said it's going to cut about a fifth of its global workforce, including several top executives. We should also note that COO Doug Ramsey, remember he was suspended back in September after he was arrested on allegations that he bit a man's nose, is leaving the company.
Funny that. Let's have a quick look at what's happening in terms of commodities, because, I mean, I go cross-asset for a moment. A sea of red. Why? Because you've got one area of green. It is the US dollar strength. That means commodities roll over somewhat. We've got WTI crude off by 3%, Brent crude also off by about 3%. This is we worry about global growth trajectory and pull down our forecast for demand somewhat. Seeing steel on the downside. Natural gas, Romaine pointed it out earlier. Longest losing streak, 8 straight weeks. That's the longest since 21 years ago. So we're down 4%. We've rolled off about 30% from our highs that we had back in natural gas. That's because we've got record production. We've also got milder weather at the moment. Milder weather, of course, roiling coffee in some ways. You've got the prices falling for coffee, thank goodness, but orange juice is costing you more at breakfast. We know why, because of the weather here in the US. I'm looking at foreign exchange at the moment, and we are seeing big moves in the Japanese yen. We are seeing 1 percentage point weakness. This as we see actually the finance minister over at the IMF once again trying to talk about some of the extraordinary moves, the FX volatility he is so worried about, the concerns about the one-sided nature of the moves in the Japanese yen, which is at near a 24-year low. But the dollar is really in large part to answer to that as well. As I put my earpiece back in, the dollar index is the strengthening side of this equation. We know why. The underlying inflationary areas that we see within the University of Michigan, the fact that consumer sentiment does see inflation sticking around for longer at a more elevated level. The Canadian dollar, we've just seen the Bank of Canada speaking about concerns within that economy. We've got the loonie weaker by 0.9% as oil falls lower. Didn't even get me started on where the pound was today, higher than lower as we worry about the U-turn with Liz Truss. Sovereign bonds. Yields push higher across the board. In fact, gilts did back up once again. Bonds fall, yields rise, as we didn't get enough from the UK Prime Minister, Taylor.
Yeah, Romaine, I'm going to keep this quick. The story's the same. Yields are higher, and we're getting big round numbers of 450 on a 2-year and a 401 now on the 10-year yield, the highest since 07.
Yeah, and look, guys, I do want to go back to the breaking news that we had about an hour ago here, and that involving the Atlanta Fed President Romaine Bostick saying that his asset managers made trades that broke central bank rules. Now, we're learning that Fed Chair Jay Powell has asked for an investigation by the Inspector General's office to be opened into what happened there. And I guess this kind of brings us back to where we were, I don't know, about a year ago. Let's bring in Michael McKee here, our economics correspondent. And Mike, I mean, it was, I don't know, about a year ago, back in 2021, when we were kind of talking about all of these sort of disclosures that got unearthed regarding Kaplan and Rosengren, later Clarida, and even Powell himself, about the trading activity of these Fed officials. What's new and what's different about what we've learned when it comes to Romaine Bostick?
Well, this is another ethics question. A Fed that is struggling to defeat inflation and keep its credibility doesn't need. Bostick admitted improper and undisclosed trading, which he says was done by a third party that he hired in order to stay out of ethics trouble. But he says he misunderstood the Fed's regulations, and the third party traded on his behalf at times when it should not. He says the mistakes have been corrected, but he's filed 5 years of amended financial disclosure forms and says, I want to be clear, at no time did I knowingly authorize or complete a financial transaction based on non-public information or with any intent to sidestep my obligations of transparent and accountable reporting. He says he did not make profits on this, guys, he says in his statement only a limited number of trades were made on his behalf during the blackout period. But the Fed's ethics officers say he omitted substantial numbers of securities transactions from the disclosure forms. He had extensive trading during blackout periods, including that March-April 2020 period when the Fed was intervening in markets. And the president of the Atlanta Fed says the board of directors there has accepted his explanation. As you mentioned, the chairman of the Federal Reserve is now asking for an inspector general's investigation, and they say they will take whatever action is appropriate.
Mike, we've heard a lot about over the last year about what Fed officials are not supposed to do when it comes to their own trading and it comes to their own investments. What are they allowed to do? How can a Fed official participate in markets?
Well, it's gotten to the point where they can have very little. They can do index funds. They can hold Treasury securities, but in funds, not trade them actively. It's really been sort of clamped down on. But the issue is when you hire somebody else to do your trading because you don't want to be involved in it, they may have incentives to trade. You can imagine a fund manager looking at what was going on in March and April of 2020 and thinking, I need to move money around. And unfortunately, that money belonged to someone who was involved in all of this, and it makes him look bad. Now, we don't know for sure whether Bostick himself did anything wrong. He says this was all done on his behalf, but it sure looks bad. And as I mentioned, this is a time when the Fed is trying to hold on to some credibility, and we've had a number of these trading issues come up over the last 12 to 18 months.
All right, our thanks to our Michael McKee of Bloomberg News. Follows the Fed and monetary policy globally, and obviously giving and weighing in on that latest news involving Romaine Bostick. We'll continue to cover it at Bloomberg News. For more, head to Bloomberg.com or check out the Bloomberg terminal. That's a wrap for our cross-platform coverage, radio, TV, YouTube, Beyond the Bell. We will see you again, same time, same place on Monday.